Guys, we have to talk. I'm going to give you the full sauce of what I'm doing with my portfolio. My portfolio is doing great. I respect your time. Let's not waste any of it. Let's jump right in. And I want to talk about Palantir. Okay, the first stock, Palantir, is back up to $70 per share. You can see my holdings right now on the screen. I have a lot of my stocks doing just a-okay. My portfolio is at 4.133. I have not had much of a pullback at all. And as I said, we're business as usual. Let's talk about Palantir. Let's talk about Tesla. Let's talk about AMD. Let's talk about my holdings and what positions you have to take, where you have to add, what covered calls you have to do. All right, so basically, Palantir is currently trading above its 50-day moving average, which serves as a key support level around $65 per share. And as you know it, just like that, we went from 65 to 70. So we have fantastic support and all the animal spirits and the emotions, even though there's a lot of that in the market right now. Palantir has fallen. It's kind of like a falling knife, but I recommend purchasing Palantir for the long term because I'm a long-term passive income, long-term investor. Short-term doesn't matter to me. So you guys can get out of here if you want to do the short-term stuff. Not interesting, okay? I'm interested in making long-term wealth, the type of wealth to set you free from your 9 to 5, to have freedom, to have retirement. That short-term stuff, go to the day trading guys. Go to them, all right? Palantir is down because of animal spirits and because it has high beta. I've said that. Let me give you some new information. The new information is there was an overreaction in the market. The market overreacted. It got hot like hotcakes, okay? Here's the fact though, what you need to do this week if you want to play it smart. Palantir is revolutionizing industries by unlocking power of big data analytics and AI, making it's indispensable. It's indispensable to the government. And last time I checked, government makes a lot of money and spends a lot of money, and that's going to go to Palantir's pockets, all right? It's as simple as that. Palantir, AI, big data, these are the trends that you got to be invested in 2025 if you want to make a ton of dough. You know, a ton of dough. You're going to have like a wheelbarrow of cash. Be in AI. I'm telling you, it's as simple as that. People don't believe me. 2025, all right, watch. The company, let me read some of my notes, all right? The company's cutting edge software such as Gotham and Foundry, two things that I've been talking about for a very long time. It is unmatched because once it integrates into a company, there's no getting out, okay? Once they integrate, they analyze the data, they give insights to managers. This information helps companies make better decisions or government better decisions. Once Palantir is installed, that's it. It's not getting uninstalled because the implementation cost is super freaking high. It is so high. Why would you spend $100 billion, for example, on a contract and then get rid of that company? There's no plan B. There's only plan A with Palantir when companies go with Palantir. I'm telling you, there's no plan B. Once you get Palantir installed, it's game over. So the stock pulling back doesn't really change the long-term opportunity at all. It almost gets hilarious for me to make another Palantir video because if you're not selling puts, you're just missing out, okay? Sell $60 puts on Palantir for March traditional expiration, which is the third Friday expiration. You can also go for 65. You more aggressive guys that want entry into Palantir and you guys realize that the pullback right now is just a short-term little bump in the road, go for 65 sell puts for February 21st expiration. It has massive support, absolutely massive support. And the partnership that they have, the government agencies, the defense organizations, position Palantir as a critical player in national security and global stability. You know, like it or not, guys, I don't like war. I don't like to see what's going on with Russia, Ukraine. I don't like to see what's up with the Israel and Palestine and all that Middle East stuff. By the way, they had a peace agreement recently with Trump coming into the office. You see what Trump's doing already? I'm telling you, it's going to be a bullish year because the Republicans are pretty good for the market, better than Democrats in many ways. Not that I have a side, I don't really care. I think Democrats and Republicans are on the same side. They have a boss above them that's all making money from our attention. Doctors don't want you to get, healthy. The system is all about money, all right? I'm just trying to teach you how to make money. Don't shoot the messenger, all right? I'm just telling you, war, unfortunately, governments treat people in a way to make money off of them, all right? That's how the healthcare system works. That's how the stock market works. If you want to make money, look at the money flow. The money flow, very clear. War, healthcare, the consumer is getting a little bit weak. We'll talk about that stuff a little bit later on in this video. But look, government makes money on people, so you might as well make money back. It's as simple as that. Government makes money, you make money back. Invest in what the government is making money on you, all right? So a big one there is going to be Palantir. I think we already talked enough about Palantir, so let's move on and talk about Sofi. Sofi fell to under $15 per share. I don't have Sofi in this portfolio. I have it in my other portfolio, but let's pull up Sofi and I'll tell you the cover strangle position that I am running, okay? What is a cover strangle? Okay, this is an option strategy. An option strategy, the cover strangle, is selling puts and selling covered calls on the same stock. Sofi is at 1657, as you can see on the screen. Sell 16 puts, sell 17 covered calls. A covered call, the name covered is because you have 100 shares. So it's a covered call. So 16 sell put, 17 covered call, print money on Sofi. Why? Well, a lot of you guys doubted me. Sofi fell. I got all these comments. My comment section turned into all negativity. Henry doesn't know what the heck he's doing. I have 1 year of experience. Henry has 11, but Henry's a moron. He's an idiot. Unsubscribe. That's fine. I don't mind people unsubscribing that are short-term minded. They weren't real subscribers to begin with. But you actual subscribers, you know what's up. When a stock pulls down and it's a high-quality long-term stock, I buy more. I buy hand over fist, bicep over tricep, all right? That's how it is. You guys were making fun of me when the market pulled back. I'm gonna make fun of you right now if you sold any stocks. I'm sorry, you made the wrong decision. And the stock market is business as usual. We are going up in 2025. You don't have to be a rocket scientist to understand that if you're gonna jump in and out of stocks, you're going to get bad results because the more action you take, the worse results you get. The less action you take, the less decisions, but smarter decisions make you the money. Jeff Bezos wakes up, you know what he says? My job is to make one high quality decision per day. One of the richest men in the world makes one high quality decision per day. Why do you think Mark Zuckerberg wears the same thing every single day? Bill Gates does the same thing, right? Because they want to keep their mind fresh to make one high quality decision per day. That's why in my Discord community, I'm not all over the place. I'm trading a specific set of stocks and I'm making more money than everyone else by doing less than everyone else because that's how life works, all right? You have the 80-20 rule. You do, 20% of the results get 80%. Sorry, 20% of the actions get 80% of the results. Sofi, it pulled down. People lost confidence. The real people that understand why I'm holding it. In my Discord, I talk about why I'm holding it. I spend a lot of time going over my portfolio Mondays and Wednesdays. This stock is fantastic. And Sofi specifically, look, banks are dinosaurs, making Sofi an obvious play for disruption. You guys know Cathie Wood. Cathie Wood runs famous ARK Invest, right? A lot of people look at her. What plays is she making? Why? It's because investing in disruptive innovation is where the money is at, all right? The money is at disruptive innovation because, listen, when you disrupt something like a dinosaur, like where I used to work at, Goldman Sachs, when you come in and you take the old money's money and make it into new money, there's a lot of money to be made because these old processes, they're not as attractive, right? All the new generation of younger folks, right? And where the new money is going to be going, right? Because people are dying and that money, that there's like a transfer of wealth, right? Inheritance and so on and so forth. There's a lot of money being inherited in America, right? Where is that money going to go? Well, it's not going to go to the dinosaurs of Goldman Sachs and in these old places. It's going to go to new fintech companies. Fintech. There's a reason tech has performed extremely well. In 2024 in January, I had a webinar. I told everyone, just buy Mag 7. And my prediction of Mag 7 outperformed the market by 2 or 3 times, right? I didn't look at the exact, but it's pretty obvious. I said Mag 7, which is Tesla, Nvidia, etc. Look, I think Sofi is a $25 stock in 12 months, maybe a $30 stock. We may see up to 100% return, and that's going to happen in 12, just to be conservative, 24 months, okay? That's how I look at things. I look at 12 to 24 months. I'm looking to sell options for good entry. I'm looking to do covered calls to generate income. I'm looking to scale clients' portfolios from 100K to 500K, 500K to seven figures and beyond. All right. That's a simple process. That's the financial formula that I'm going after. And SoFi reported positive net income. All right. Looking at my research here for 4 quarters now, and profitability is expected to continue to improve at this point. So net income was $61 million in the third quarter, up from a 267 million loss last year. You know how insane, that is. All right? I know some people say, "Oh, is Henry on drugs?" No, you're mistaking my normal energy for most people's low energy. I just enjoy making these videos. I enjoy putting money in your guys' pockets. That's why I'm excited. Look, SoFi has a strong support at $15 per share. Very strong. We just bounced. We bounced like a rabbit, right? We're like bouncing like a little bunny. All right, we're going from 15 to over 16 like this, like it's nobody's business. All right, why? It's because as soon as SoFi went below 15, it was too cheap. It was stupid cheap. All right, it was stupid cheap. So SoFi is a really good covered call at $16 for February 21st. I gotta have fun in these videos, guys. I've been at it for so many years. I want to have fun as well when I make these videos, right? Listen, let's go to the next stock. AMD. AMD, I know it's hitting all-time lows. I know people are in pain. But listen, you're going to thank me later. All right, let's go to AMD right now. And when a stock hits lower lows, it's okay. Don't worry about it. All right, the stock market's price doesn't matter. It's just an opinion in the short term. The only thing that matters is, are you getting in at a price today that's going to be much higher in the future? Okay, if I said that correctly. If a stock is like AMD is going to be 175 in, let's say, September, October, or what, even next year, who cares, right? We're not here to do short-term stuff. And today you pay 121 or 131 or 127 and a half. Look, it doesn't really matter. $5 here and there is not that big of a deal. Buy a company that has strong fundamentals. Buy a company that has a strong trend. It didn't matter where you bought Amazon 5 years ago, okay? Because Amazon went up because online shopping, everyone's lazy bums who sits at home and wants to order a bunch of Amazon packages, which I don't blame you. If I was living in the United States, I would do the same thing. I would order package after package, right? But I'm just joking here, but you get the point. When you're in a good company, you get good results. AMD, for me, is like a $170 stock. And yes, it's a falling knife, but when it converts to a bullish move, that bullish move, maybe 4 or 5% in a few days in a row, 3, 4, 5 days in a row, all of a sudden you have a $140 stock. All of a sudden people are like, is it time to buy AMD? No, bro. Dude, it was time to buy AMD right now when it's 120. It's even better to buy AMD by selling put options at 115. What's better, 115 or 121? 115. So sell puts at 115. I know it's a falling knife. Okay, I don't have any knives right here. I have a pencil that I write my notes here. Listen, catch it like that, all right? Catch it like that. I know it might hurt a little bit. You're not going to die. You're going to get good long-term results. That's my opinion, obviously. I'm not a financial advisor. Just giving you my thoughts, right? I'm just a successful investor giving you my opinion, all right? So this week I'm purchasing on any weakness I see. I saw weakness last week, I purchased. Everyone else sold, I purchased. All right? So you got to go against the grain if you want unusual results. Do what other people are too scared to do. All right? So when the stock market goes down, you should view that as a buying opportunity. When the stock market goes up a lot, you should view that as taking profit opportunity. All right? So I'm buying shares on any weakness, and you can't perfectly time the market, but I want to be early. The corporate world is shifting from Intel to AMD, so don't miss this opportunity by trying to time the market and waiting. Stop tiptoeing, jump into the pool. If you don't know how to swim, you better learn how to swim real fast. All right, so check out the AMD chart. I'm going to go to the 3 months right here. This stock is hitting low after low after low and another low, and that is okay. So if you can take, the tough times, there's going to be good times, and vice versa. The stock market is not an only good times thing. It's some rough times, some good times. If you have the right strategy, you experience more good times. Simple as that. AMD was a stock that was over $200 per share And so, maybe we're not going to hit 200, but can we hit like right around here, 175, 178? Absolutely. Absolutely, because there's a big shift from Intel to AMD. And the risk reward, guys, it's all about risk. All right, it's all about, all right, I had hiccups. Risk and reward. That's what finances are. That's what relationships are. Listen, the risk for AMD to me makes a lot of sense because the downside is okay, we can be maybe at $100 per share. Upside is 175, so we're looking at $20 of downside. Worst case scenario, bear case, and then bull case. We got 175, maybe 180. So we got $60 upside, maybe $20 downside. So that's a good risk to reward ratio for me. Now, let's move on and let's go to Tesla. Tesla, I have a big, big position. I've had a big position on Tesla since 2021. That's how I went from 100K to 700K. Scaling is done best with high implied volatility stocks. Tesla is a good example. Nvidia is a good example. Tesla fell below 400. People were panicking. I said, buy. Buy with all you got. Don't stop buying. Buy like it's COVID times and you got no toilet paper at home and you're like, I'm gonna have to use my hand or I'm gonna have to use some toilet paper. I'm gonna pay triple for the toilet paper. All right, obviously, just having a lot of fun in this video. But look, for Tesla, it's a good company. It's a good stock. It's as simple as that. I'm up 200K on this position. You guys know I made Tesla videos. You guys already know I have over $1 million in Tesla in my other portfolio, and I'm buying it literally bicep over tricep on Tesla. So I'm still bullish on Tesla because I'm still bullish on Elon Musk. Elon Musk is the man. He's the G. This guy knows what he's doing. Tesla is going to keep innovating. Full self-driving. We hit a floor at $400, guys. I don't even know how Tesla went to 376. I wish I would have bought call options. I wish, but I'm not really an option buyer, so I wish I bought call options. That would have been a good purchase. 450 covered calls right now. I'm down on covered calls expiring on March. But listen, if you get into covered calls right now, go for 450, go for 455, go for 460 for March expiration. Buy Tesla hand over fist. Sell puts on Tesla 400 for February 21st. Oh, you guys thought I wasn't going to give you nothing else new? Put credit spreads. I recently made a put credit spread video. You guys have to watch it. I've been 100% right. That was a few days ago. We didn't get many views. But I'm telling you, that video is important to watch. I'll have it at the end of this video or in the description, or I'll do in both. Okay? Put credit spreads. I gave you an Nvidia play, which is still good, by the way, in that video. Test 400, 390. Put credit spread. Sell the 400 put. Buy the 390 put for a put credit spread expiring February 21st. This position, and actually let me show it to you. My Uncle Henry is all about showing. Why am I talking when I can show? Okay, go to sell put. All right, we're going to go for the February 21st expiration. All right, and then we're going to scroll down here and we're going to find the 400. The 400 has bonkers premium out of a movie. All right, this is a Hollywood movie right here. 400 sell put, 0.32 delta, 65 implied volatility, open interest 14,800. We about to make some money. All right, so 400 sell put. We're gonna buy the 390, the 390 right here. So you'll see that it is a 375 premium that we can collect. We're going to be risking roughly $625. All right. So, roughly $625 we're risking. We're getting over 50% return. What a beautiful return in 35 days. Now, listen, I will tell you, this is a medium risk, okay, high reward play. If you want a lower risk, you simply go down 380. All right. You can go 380. No, I'll just, whatever, 380, 370. I want to make sure this video isn't too long. All right, let's move on to the next stock. Nvidia. I think we found a good floor on Nvidia. Many asked me if it's a buy, and my answer is yes. Nvidia and AI, you guys know how crazy AI is and as an opportunity. Got no idea. Nvidia has continued to develop numerous new products, some of which just announced at the CES conference. Right on the surface level, by the way, when you look at the valuation of Nvidia, the price to earnings ratio of 53 is above S&P 500 average, right? So understanding that Nvidia is not cheap, though many slower growth tech companies have a higher earnings multiple. How about that? So it's not cheap. When you look at the other companies, when you look at the other crap out there, you're like, man, Nvidia has high growth. Yeah, the price earnings isn't magically low, but it's definitely very reasonably valued in compared to the competitors, all right, and compared to other stocks in the tech space, all right. Listen, also Microsoft expects to spend roughly 80 billion building out its AI infrastructure this year. So this is the early innings for Nvidia. Whether all the chips go to Nvidia or not, whether people buy and the companies buy off of Nvidia or not, I know they got some big suppliers. That is the risk. It's going to be all right. So Nvidia remains a great way to play the AI infrastructure build out, and it does trade at an attractive valuation. So you want the stocks on sale, and you want to buy stocks that have reasonable valuations. I would say Nvidia has really juicy premiums. So I'll show you what Nvidia looks like right now. Go to NVDA, and then we're going to sell some put options on Nvidia. And you can already see this thing is going up. This thing's going up. So I got some covered calls at 145. They're looking a little dangerous, but what I did was I did a 145 covered call. This was a few days ago during my coaching session, I guess. So if I go down here and go to my history, this was done on Jan 15, so like 3 days ago right now, 3 days ago. So it was midweek during my trading session that I have in my Discord on Wednesday. So it looks like on Wednesday I sold some 127 put options for $3,500, and we're about to make the full 3,500 looks like. I probably made a lot of money on this short term, so I might actually close it out for a profit because when I do get a profit short term, it does make sense to close it out for a gain. Why would you hold it if you made most of the premium already? So Nvidia has a good floor. I would sell 130 puts. Obviously, the 127 is what I did. February and March both have really juicy premium, so this is the number one safe stock. Now, let me talk real quick about the SPY because SPY, I'm buying SPY and I'm investing in SPY. So let me talk about the concerns real quick because I want to talk about, I don't want to be a hype man here. I want to tell you the concerns and the objective facts on, SPY and where the market's at. Listen, the housing market, I see some concerns, to be honest with you. There's a high mortgage rates driven by elevated 10-year treasury yields, which we know is a problem in the market. It's a problem with the Fed. And these 10-year treasury yields are significantly impacting the housing sector, choking off, all right? We're getting choked off of activity, all right? We're getting choked off of activity, and this is a key area of concern for economic performance, all right? The housing market is the most important thing. Where do you think all the moolah goes from people? Most people are middle-class people, right? There's very little rich people, like stupid rich people, all right? There's also a lot of people on the poor side, okay? That's just how the Gini index works, right? There's a few rich people, and the 1% have as much money as like the bottom 50, okay? So what happens with like 90% of people, they literally spend most of their money on housing, okay? Even when I was working at Goldman Sachs, my paycheck after taxes was like maybe, I think it was like 5,800 or something, or 4,800. It's been almost like so many years now, but after taxes, my rent in Los Angeles was around $1,800 or so. So I was spending, like 40% of my income on rent. So it's no joke. And I know I had a decently high salary. Like 75K was a lot of money in 2017. Guys, it was 8 years ago. So 75K today is definitely six figures. So I was making a inflation adjusted six-figure pay back then. So yeah, it's crazy to look at the housing market but look, despite a weakening housing market and ongoing struggles in the manufacturing sector due to high mortgage rates and a strong dollar, these are not the best for S&P 500. I still think S&P 500 is going to hit 6,500 by year end. So I think we will hit that point, which is a reasonable return. And I was actually looking at some research, and I was watching a video from Mark Newton of Fundstrat Global, head of technical strategy, and he mentioned the percentage of stocks above the 50-day moving average is down to just 25. So this actually made me think, wow, we actually have reasonable technicals in the market. So Check out this quick 60-second clip, and I want to show you what he said.
The percentage of stocks right now above their 50-day moving average is down to about 25%. So it has been a very hard-hit market in the last month. The one saving grace is that technology, to its credit, came back and actually has helped the broader indices remain afloat. So long-term trends actually remain in very good shape. It's more just near-term breadth deterioration, as well as I think sentiment has also gotten abnormally, pessimistic regarding the potential plans for, the president-elect's policies, which many of those we don't even really understand the extent to which that could be inflationary, and there's a lot of forces that go against
happens.
that.
Yeah, what becomes law or is actually done. But it still seems like you're saying, look, the indices are holding up, even though if you lift up the hood, what's going on is not great when you look at the detail. You still like 6650 for the S&P, though?
Well, it's just January. That's my year-end target. I do think that's going to be hit.
So look, the sentiment is pessimistic regarding potential plans for the presidential policies. We have some main concerns like inflationary policies. None of that stuff matters, guys. I'm buying SPY because you guys know I'm a long-term investor. I expect SPY to be higher at the year end. So I'm not going to look, if this is point A and this is point B, and I know, it's an upward slope, I'm not going to try to time this little situation right here. I'm not going to try to do that. All right. So what I'm going to do is I'm just going to hang out, own SPY, and then honestly, just look at the facts. I'm just going to leave you with this fact before I finish off with QQQ in the tech sector specifically. The stock market kind of had a bad performance in a little short period of time, right, last week. But if you didn't panic and simply did nothing, then you'd be up more than 5% this week. So if you're an Nvidia shareholder, you'd be up over 11%. And by the way, this is I'm making the video in the morning. I see Nvidia is up a good amount today, and we're a couple hours into the market. These numbers are rookie numbers. We're up over 7% on the stock market and over 15% on Nvidia. So excuse me, all right? This is the big difference between emotional investors and smart investors. Emotional investors sell and lose out on big days, which I said don't do. So I encourage you, if you want to get the best results, just subscribe. I'm going to keep giving you guys the best plays. I'm going to focus on where I see wealth building opportunities, where I see option plays, what stocks I see outperforming. If you want long-term results with minimal effort and less mistakes, I'm doing specific research. And I'm going to keep uploading free videos. So make sure that you are subscribed because you're going to get a lot better results if you are. It's as simple as that. Let's wrap it up with QQQ. The technology sector has been helping overall because tech stocks have been outperforming. Again, the big tech Mag 7 stocks, they're doing super well. And all of the money is flowing there because going back to the Gini index, there's a few rich people and there's lots of poor people. Same thing with companies. There's a few companies making all the dollars. And then the other companies, they're fighting for even their mid-cap, right? Being a mid-cap stock and having a $10 billion valuation is hard. But these stocks that are at $1 trillion, they can add 100 bill pretty easy. 100 B with a billion. So the AI story is still in full motion. Innovation in America will continue. Tesla will dominate. Nvidia will dominate. And the biggest sector weight so far is these big tech stocks. So buy QQQ, buy SPY, dollar cost average. Don't get emotional. Be a long-term investor. We're going to make some money in this market. I am very confident, and I've been very profitable in my community. I'm going to hold it that way. So subscribe, and I'll see you guys in the next one.